Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on euro currency. So you can see that market is changing drastically the intraday picture. The bearish pattern that we talked about and actually traded last week has been destroyed. So unfortunately we had to go out at break-even without any result. So then Monday's opening was kept up and then market returned back to the points where on Friday the downside action started. So this stop currently is over. And now the major concern about this in question actually around this performance stands in relation to weekly bread and butter big trade. So in fact, the major question is whether this action is already the start of the bread and butter trade and markets coming to the 618 resistance. So if we take a look on the weekly chart, we said that's great support. Could consider taking long position, but here market hasn't quite reached it. So it started upward action, but without the testing of the major part of this level. Or potentially we still could get some downside continuation, deeper action before the major pullback will start. And unfortunately at this point we do not have enough signs, patterns, factors that could let us to answer definitely on this subject. At the first glance, indeed, market is turning up. Here is moving higher, erasing the butterfly that on the 4-day time chart. If you remember, we suggested that might be complete the XOP, so XOP is not completed still, but market is showing sharp upward reversal. At the same time, take a look that in the daily chart, it's coming to a MACD line. And at this point, where the price will start to flirt with the MACD, agrees first with the natural area of support resistance right here. And if you take a look at the lower time frames, you will see that this is also the point where we have a confluence resistance. It's 1258, 1296. So this area of the around 35-40 pips where we stand, it's also the confluence resistance area. And actually market already has tested it a few times. So it was first test, pullback. Now market starting showing the second test. And this here is we have the acceleration gap here. It's not been closed, so you could see that it still exists. It's minor gap here. We still have it. It's not been closed. Potentially also if market somehow will just break it for a moment and hit the 1330 area, we also could get a kind of the Gartner's triple to sell pattern at this point. So you can see that with all gathering of such moments and actually events, we can't make the different conclusion that we're on the way to with the bread and butter trade on the weekly chart and moving to the 1380 area for the highest ending level. Although this also might be the case, so we will see. What we could do currently at this point, currently I wouldn't take any new shorts by far and watching for potential grabber on the daily chart, whether it will be formed or not. Because currently at this point with the performance that we have, it's obviously not bearish on the intraday charts and it doesn't make sense to just struggle with it. But let it free to be completed and then see what will happen. On the hourly chart, the hand short expansion that we discussed still has worked. So in some kind this Monday opening upward action, you can see nice thrusting acceleration, breaking the neckline. And the only trading setup that potentially is possible, I don't know how it will be attractive to you, but actually currently on the euro currency I do not see anything else. It might be just the finalizing of this target of the hand shorts on the hourly chart. As you can see, our target stands 1330. And take a look. Here might be some butterfly or maybe some other pattern will be formed, but mostly in most cases it's usually the butterfly. And you can see 1618 extension stands precisely 1330. So it might be just complete this area. In general, this setup is not really bad because actually the risk of this setup is very small. You just need to wait for some bounce down to minimize the potential loss if you would like to trade it. And please stop just below this area. Why? Because as you understand, here's we have hand shoulders. Market stands very close to the target. So the natural performance suggests market standing above these lows after the breakout and above the neckline. If you will see that market is turning down, reversing, breaking it down, returning back below the neckline, it definitely means that this setup is crushing. So this will be not natural behavior. Bullish market should not behave in this way. So that's why it will be enough just to consider these lows as invalidation points, by my view. So, and that's probably all that we have. So currently, then the next decision we could make only when we will see what we're having here, whether it will get the grabber, what the performance will be, so whether it makes sense to wait for another downside action first, or market will just keep going higher. So that in towards what we have currently. And here is actually a bit tricky detail. As you know, on the gold market, we're also waiting for a significant upward action against the dollar. But at the same time, if you take a look, for example, on 10-year bonds, we have this consolidation on the weekly chart of the yields. Market is, stands flat around 4.5% for now, but it's in general looks as a continuation for the interest rates on lower time frames with the same hand shoulders pattern that we have. Here we also have a kind of hand shoulders pattern, and you can see that the target stands actually a bit higher. So potential yields also could rise, which will be potentially bearish. So the situation really stands tricky in the short term. It's lots of different signs in both directions. So that's why in the current circumstances it would be better to not try to take the shorts, because our setup has been destroyed, previous setup, butterfly on the fall time frame chart. Grabber has not been formed yet on the daily chart. That's why it's better to stay side. If you would like to trade on the long side, here's potentially what you couldn't do. Here, just think side whether you're interested with that or not.